So another trade breakdown on EU. This is another perfect example of a perfect setup. So I'm just going to break this down quickly. Alright. So this is the Asia range highlighted in this box here. So basically we could see prices pretty much at the top of the range. And I was waiting for price to break up and sweep some liquidity from the top of the Asia range. So if I play price forward, we can see we come up, sweep Asia highs here. So if you mark that on there, Asia highs, and then we're looking for a break of structure to the downside, and here we go, we've got our break of structure here from this bunch of candles here. Once they have been broken, as that was the most recent higher low, so once they're broken, that's our break of structure there. So then once we've got a break of structure, we're looking for the pullback so we can get an entry. And if we play price forward, we can see this bottom point here is where price started to reverse and come back up. So that's when I would have took my fib out and gone from this swing high down to this swing low. And then I would have been marking out my OTE area. So from the 61% to the 78, that's my OTE. And then we can also look for some additional confluences. And in this instance, if we get rid of that, we've got this balanced price range here, which is these two candles here. We've got a fair value gap in this candle as the wick from this one and this one don't meet, so we've got a fair value gap there. I've also got a fair value gap with this bearish candle here because the wick from this candle and this candle don't meet. And when we have two candles that both have inefficiency like this, that's a balanced price range. So a lot of the times price will be drawn to that even more than just a standard fair value gap, and then we can see a reaction off of there. And then there was also, if we go down to the 1 minute time frame, another balanced price range that I had marked out here. Alright, so we've got our OTE and we've got some additional balanced price ranges. And if I just show you on the 5 minute, so we're looking for price to come back up, tap into our OTE, and also give a rejection off all of these balanced price zones, and then we can look for an entry. So on the 1 minute, I saw price came up, it tapped into our OTE, also into this balanced price range, and then gave us a 1 minute bearish through line strike. So that is actually when I entered. My entry was a little bit higher because as this bullish candle opened, started coming up, and I ended up getting in about around there somewhere. And then for stops, I had I think it's about a 4 pip just above the recent swing high, because if price does end up coming up into this area and going past the recent high, then we don't want to be in the trade anyway. So, and then for targets, I was just targeting in a 1 to 3. So we've got price come up, we've entered now. So if we play price forward, we get a nice rejection and see price start to push down. Come back up into around our entry point, and then start to push off. At this point here, I would have put my stops to break even, so it's now a risk-free trade. And then we can see if we carrying price, it just carries on down and smashes our TP at a 1 to 3. So that is another textbook trade that I took, and this is the exact trade that I take on a daily basis if it presents itself. So if you like the video, give it a like, and I'll be sure to do some more of these trade breakdowns in the future.